Let's get the latest on the stock market now. The AMP chief economist, Shane Oliver, joins us. Shane, a huge drop at the start. How are we looking at the moment?
Well, at the start, we were down around 6% or so. In fact, I think we went beyond that. So incredible fall, obviously reflecting the falls on Wall Street. Wall Street had roughly a 6% fall on Friday. That, of course, if you convert that into billions of dollars, would have been a fall of around about $150, $160 billion wiped off the market. Good news is we've clawed back a little bit of that. We're currently down around 4%, which is a drop in billion dollar terms of about $110 billion. So not a good outcome, but unfortunately, these things happen every so often in share markets. It's all a response to Donald Trump's tariffs and obviously investor fears globally and locally that those tariffs could trigger a global recession.
So it's pulled back a bit. I wonder now, Shane, is this somewhat of a holding pattern? Do you think we will see a bit of a holding pattern until the market and investors gets to observe and see what sort of reaction there is on Wall Street tonight?
I think that's right. We got that initial decline at the open, a bit of panic selling. Then the market settled down a little bit, waiting to take its guidance from what happens in the US tonight. Just to put it in context, from the highs in February, our market's fallen around, I think it's around 14%. It's moving around a bit, obviously, with that volatility today, down around 14%. In the US, it's down around 17%. The reality is that these tariffs are far worse for the US because they're putting tariffs on virtually all of their imports, whereas we're not putting tariffs on our imports. And American exports are all vulnerable now, whereas in the case of other countries, including Australia, it's only that part of the exports going to the US. So the impact on non-US countries is nowhere near as severe as it is in the US. And that should mean that our share market shouldn't be down as much. But, so far, there's not a lot in it. But I think we're just going to take direction from the US, and that's going to drive how the market performs from here.
And this, I guess there's so much uncertainty, as you rightly point out, the fear of a recession in the US and globally, potentially there's that concern. And then you've got the political uncertainty around the president himself, who has previously, talked up the way the market's reacted to his policies as a positive, but now talking about it as the medicine that's necessary. But I just wonder how long he will put up with the volatility and the concern in the markets in the face of the trade hawks like Peter Navarro and others in his orbit saying, you've got to stick with this. This is the medicine we need.
That's right. Treasury Secretary Scott Bessent has referred to it as a detox, and comments over the weekend in the US suggest that they're still not concerned. He's not worried about a recession, for example. But I reckon at some point Donald Trump will hit a pain point here. Back in 2018, US shares fell almost 20%, between a high in September and a low in Christmas Eve, in fact, 2018. Trump then started to soften his stance and started to pivot towards the phase one trade deal with China. So I think there is a point there that will be reached, which will start to put real pressure on Trump. And don't forget, US share market, S&P 500 down 17%. Another 3% more, it's through 20%. That is traditionally regarded as a bear market. So you'll have headlines in US media screaming Donald Trump's bear market. And I don't think he'll like that to stick for too long. So I suspect that at some point he will start to pivot, start to focus more on negotiating some of those tariffs back to more reasonable levels. He's already referred to Vietnam, but obviously there could be more to come on that. And likewise, starting to focus more on tax cuts and deregulation and the positives of his agenda. But problem is we don't know at what point that will be and how long it will take him to sort of switch a little bit in terms of his focus. So that's the big unknown in all of this. We could get up tomorrow morning in Australia and find that he's already done a pivot, that he's already talking about softening things. But then again, we don't know. He could dig down and announce more tariffs on pharmaceuticals. It's a very big unknown in the short term. But I think you're right. At some point, shares will fall such that it will cause a lot of pain for him because he regards a rising share market as a KPI, as a key performance indicator. And, of course, shares did in the US rise 3 out of the 4 years that he was last in power between 2017 and 2020.
Yep, indeed. Shane, great to get your wise words as always. The Chief Economist at AMP, Shane Oliver, thank you for your time.